Up. Hello, everyone, and it's a good thing you're back. Except, hold on a second. Yes, you can hear me. Just had to make sure. There you are. Welcome to Vishal and Company. Unfortunately, today, Maddie is, well, not unfortunately, good for her. She's at a callback audition for Wedding Crashers 2. I hope she gets it. That sounds like it's going to be a fun gig. So it's just us, me and my ugly mug and my good friends here. Joseph Morton, Taku Ndachena, and Vishal Tura, and me, Galen, the crusty old man. We're going to be discussing the stock market woes at this point. We're seeing the bits of drops here and there, and should we be buying into this stuff? Also, we'll be talking a little bit about that idiot Elon and his latest foray into litigation. But let's start off with Vishal.
Thanks, Galen. Also, there's another story I know you'll want to touch on it, and it's about Elon Musk and his Cybertruck, but we'll get to that in just a minute.
Yes. Oh, yes, and I'll probably talk a little bit about Kathy Wood just because I can't stop. But keep going.
Right. So it's been a wild week actually in the markets, and I know it seems like I say that every week, but we're seeing some red, and it's funny because everyone is trying to understand what the heck is going on now with inflation. Not sure if you guys saw this, but the CPI for June, the Consumer Price Index, which measures inflation, came out higher than expected. It's the biggest monthly gain since August of 2008. And excluding food and energy, inflation increased 4.5%, which is the largest move since September of 1991. Interestingly enough, the biggest percentage gain in inflation comes at 10.5, and believe it or not, it's from used cars and truck sales. So that's the biggest inflation increase. It's from used cars and truck sale. But remember the whole idea of transitory inflation, Powell telling us, hey, don't worry about inflation. It's nothing to do with money being printed or productivity decreasing or people with more money. It's more to do with economies reopening, people buying goods, and once they tone down and go switch to services, that inflation will disappear. Meanwhile, other people are saying, yeah, but will businesses actually decrease prices? They're not, right? So this battle between is the Fed correct or not continues. And we're at a point now where the market is now beginning to question the whole transitory inflation narrative, right? And that would sort of mean that you'd have to admit that, or the Fed would have to admit that they were wrong, which they will never admit on the whole transitory inflation side. So we're at this point now where markets are really confused. That's what we're hearing from a lot of analysts and retail traders. Okay, inflation data came out high. Markets did make new highs, originally, and then they began to sell off now that they're pricing in the whole idea of, okay, maybe interest rates are going higher. So as we speak right now, actually, the S&P is hitting session lows. Looks like the Nasdaq's going to hit not session lows just yet, but it is declining. The Dow is also falling at session lows, and the small caps are falling even lower. So markets are now afraid. Are they afraid because of interest rate hikes? I don't know, just because if you look at the US dollar, okay, it is up today. It is slightly green, but it really has just been ranging. But we're at this point now where if the dollar is moving higher, a lot of people were saying it's because they expect interest rates to rise in the States. Or is the dollar rising because it's a safe haven? That's it's really crazy right now. The inflation story is there, but the economy is not showing signs of like improvement. We saw jobless claims still, I think, at 380,000 job losses. Retail sales actually picked up today by just a little bit. So it's still this back and forth, this confusion, and I think what you're seeing in the market.
I think the retail sales bump is really just people getting outside for the first time in a while.
For the first time in a while, yeah. Okay, so there's that, and I know last time, a lot of people were saying what happened to retail sales because the numbers were coming big, a few months ago, and it was mostly because I guess the government checks, right, the stimulus checks that people were getting, and a month after, that's when the deal, the retail sales increased. And let's just continue on with the inflation story. Well, let's stick with the Fed first. Uh, Fed Chair Powell's been testifying in Congress, so a lot of Congress people grill him with questions, and a lot of them do it maybe mostly for brownie points with their constituents because some of the questions are pretty easy, and they thank Powell for his service and all that kind of stuff. But there was an interesting thing that came out on Wednesday where his remarks were put out before the Fed testimony, and it didn't mention the word transitory. What it mentioned, though, was that tapering is a ways off and further economic progress needs to be made. And also, this is what I meant, nothing transitory, but instead it read inflation will persist for several months and then moderate. And this was actually built upon with Yellen as well. Yesterday, Janet Yellen, the Treasury Secretary, came out saying sees several more months of rapid inflation before easing, worries about the housing market impact. So transitory seems like it's gone. It's not part of the lexicon anymore. uh, and yeah, it's going to be interesting because they can't admit they were wrong. The Fed cannot admit that transitory story was wrong. So it's going to be it's going to be fun to see how they weasel out of it, and maybe what we're seeing right now is the market starting to lose confidence in what the Fed is talking about, when it comes to inflation. So that's what I'm watching for the markets heading forward. It's not looking too good here on the equity side. Meanwhile, we're seeing money run into bonds. TLT had a huge jump. And what this means, again, folks, is when money is running into bonds, it actually means interest rates are declining. So, try to price that in with, okay, the Fed wants to rate interest, like they want to raise interest rates, but the markets are basically indicating the complete opposite, that rates are not going to be going up, or money's just running into bonds for safety, right? They're literally scared. Maybe there's that confusion. So keep an eye out on that. And for us here in Canada, things aren't that better. Our Bank of Canada had a meeting on Wednesday. There's this big block that they mentioned about transitory inflation, transitory supply, higher gasoline prices. But this is what they said at the very end. The factors pushing up inflation are transitory, so we're still using that phrase, but their persistence and magnitude are uncertain and will be monitored closely. So not
So it's
really something you
transitory,
want.
but not really, because we don't
Yeah,
really
so
know.
yeah. So it's not something you really want your central banker to be saying. And I think now the markets are beginning to see or sense that maybe these central banks are wrong on the whole transitory thing. And I think it's something we here on Vishal and Co. Like I know you guys have been talking about this, but just the whole reckless money printing and monetary policy, and we thought down the line it was going to impact us, and maybe it is now.
I think so, but I
One
think
big
this is also a symptom or a revelation
Mhm.
of a problem that has been in the system already,
Right.
right? The pandemic and quantitative easing in the way that we see it now is merely just a stopgap measure, some sort of band-aid on a bleeding cut that's pumping
Yep.
out quarts and quarts of blood, and they're applying like a band-aid, right?
Yep.
So I don't know if we can say that it's just the money printing that is making this happen. I think the economy is finally just sort of going belly up. I mean,
Yep.
that's a pretty extreme term, but it's normalizing. Let's put it that
hmm
way.
hmm
Sure. There was an article or something I saw earlier this week, and it was talking about how the Fed kind of is in a hard place now because it has to
Yep.
continue to keep the confidence the market at the rate that it's growing right now, because people's pensions can't take a second.
Yep.
A boomer's pensions, for lack
hmm
of a better phrasing,
Hmm.
can't take another hit. in their savings.
Yeah.
So
They're
it's
never
like,
they're never going to be able to stop working.
No.
yeah, they'll never be able to stop working at this rate,
Mhm.
especially with how high we've gone
I'll just
now.
show you guys this because a pension fund actually retweeted one of my older stories, and we were talking just about this, but I wrote this a few months. Well, I think this might have been last year actually. Inflate or stock market crash. The Fed is trapped. Actually, no, it wasn't last year. I believe it was probably. Sorry, no, it was just a few months. Just last month. My bad, June 7th. It seems like this was
You've
going
lost
on
all
for
track
such
of
a long-
time in this pandemic.
It seems like it's going on for such a long time. But I wrote in there that the Fed cannot allow markets to fall due to the leverage of some funds, but really due to the pension crisis. Many of the
Oh, yeah.
baby boomers who are about to retire in a few years cannot withstand another market crash. And then this pension fund here, we had a bit of a discussion, and they talked about this. How I mean, take a look at this, folks. A lot of people aren't saving money, and they're in their final years of their work careers, and they don't have anything saved up. So it's a bit scary.
True. True. And I think for most part, it's protecting these guys that
Yeah.
is probably the biggest concern. They don't have as much compounding time as the millennial group, which is, trading NFTs and
So we talked about like the Bank of Japan. They like literally own 70% of their stock market now because they're just buying stocks. The Fed hasn't openly said that they're going to buy stocks, right? Even
But
though,
they've
like I
already been
mentioned,
buying it with those overnight payments. They've basically just been throwing money at the market. They don't own the stuff, but they've been buying it through proxy by getting the banks all this cash to supposedly lend to each other, which they're never doing. It was after that First Regions Bank in the United States had like $6.5 billion worth of bad loans,
that
and they
loans, right?
rolled it off to their friends, and the banks just went, "Yep, we're done."
I don't know which bank it was. It might have been Wells Fargo. It was
Yeah.
one of the big US banks that is removing the line of credit.
Yep, it was
Yes,
Wells Fargo.
that's
Yep.
right.
So it's like if you have anything owing, you're gonna have to pay it down now,
Yep.
or have the interest payments after the period is over. So it's like I think they know that. Oh yeah, we've kind of let cheap money flow around a little too much.
And the
Now
fun,
let's try.
Kind of seems like a pretty good endorsement for decentralized crypto, to be completely honest. I mean,
well, I mean, I don't.
that's a whole lot of industrial stupidity going on. If you can get away from that,
That's true.
I guess. I mean, if it can be planned on something that's similar, but as TK was saying, they're dropping it off, and it's funny how the bulk of the pressure goes against the actual retail customer, rather than the institutional customers, which took all the money in the fucking first place.
There's a quote I saw. It was like, in a crisis, it doesn't matter for the Fed and the policymakers. It doesn't matter retail or institutional. They're both gonna hate you the same amount.
And the thing we should make it clear too, right? Wells Fargo is like the third largest bank in the States by market cap, right? This is not just a small bank. I mean, only J.P. Morgan and Bank of America are first and second, but Wells Fargo being the third largest bank, shutting down all existing personal lines of credit, right? Which lets people borrow either $3,000 to $100K. Usually what
Yep.
people borrow to pay bills, to buy their homes, to buy cars. So
Yes. So TK, do you think this is going to start like a bankruptcy trend?
The smaller banks. You know what? It's something I saw last year, but as well, I'm a nerd, so I do nothing else but this. So I look at the central banks. Not the central. The FDIC puts out the number of institutions that are insured each year, and I think it dropped by like 6%. Doesn't seem like much, but that's like 300 banks that are not insured anymore. So they might not be bankrupt, but a lot of them are not insured. And we went from 5,300 banks in 2016 to close to 5,000 banks this year. So it's like so many banks are now, they can't put up with some of the requirements to keep up with the FDIC. they can't get the loan portfolios enough to keep afloat. So they're kind of coming out of the system and saying, we rather do our own thing in our own small community rather than focus on the big picture.
Which
Because,
makes sense.
Yeah, it does 100%.
Now,
That's what banking generally works.
TK, do you think this is also going to cause not necessarily a problem among banks themselves, but personal bankruptcies? Because it would seem to me that if people are using these lines of credit, like I do, to pay bills off, suddenly they're going to be defaulting on bills. Collections are going to start taking place. Things are going to start to get repossessed, and people are going to have to fight for some sort of recourse, and that's bankruptcy, isn't it?
That's true. I think it's like it's the the stool with 3 legs kind of thing, where we've had the support from the stimulus. We've had support from foreclosure forbearance. So companies like Fannie Mae are not foreclosing on mortgages and stuff like that. And the banks have also have a forgiveness program. I think as each leg of the stool is taken away, it just kind of weighs on a lot of people, especially if you're not able to do the lines of credit, because that's kind of where most of the borrowing power is. But I think I don't know who it was, but it was on Twitter. I'm on Twitter now, by the way. So
nice.
If you see stupid tweets coming out, it's me. But he was talking about how Federal Reserve was controlling margin requirements for people's accounts.
Yeah.
So they went from 50% margin requirements to 100% during the boom. And then they took it back down to 50%. And now I think it's lower now. I'm not sure where it is at now. But it's like it's like you're given this freedom to do stuff, and then it's taken away for a bit. And then you're given the freedom again. Yeah, it's like 25 or whatever it is from now. And it was at 50% just not too long ago. So you can kind of tell there's a lot of this free, cheap cash that's around. But the big question is like, what happens once that's pulled away from people? Are people going to kind of panic sell? And if you have a margin account, are you going to drop all your positions and stuff like that? And if you've used a line of credit that's giving you an interest rate of like 0% or whatever it is, are you going to be able to put up with the margin requirement of 25% interest on your thingy? Kind of going back on that, I don't know if you guys have talked about the Robinhood prospectus that came out.
Right.
Not yet.
Last week.
Yep. I think so.
Yeah. I think that's a whole topic in itself for another show, but it's a load of because I'm PG here, baloney.
Good for you for showing restraint. I like that. Awesome.
Someone
I
has
think
to.
I think they're crooks. I think they're crooks in the disguise of a public company.
Yep.
And I think we'll get to the short sellers later, but I hope Jim Chanos is looking at this one. But this is just another extension of that, allowing cheap money to come through. And once it's taken away, I'm not sure what people are going to do from there.
Now, it goes back to the whole question, even though crazy things have been happening this past year and a half, technically we haven't actually had a financial crisis just yet.
No, we're teetering on the edge.
Yeah, what if that's, I mean, that sort of, when I saw the news on Wells Fargo and that banking, the personal lines of credit, that was sort of my...
That's a big indicator that they think something's going to that's falling out. And many credit card companies have also shored up their defenses. I got a letter just recently, but before the Wells Fargo thing, indicating that there were going to be no forgiveness. And if I even missed payment, and not just like not paid, but missed the date of payment twice, my insurance or my interest rate was going to skyrocket to like 28%. Like they're just being brutal, right? And of course, again, this goes to my point where, the big kids get to have all the breaks while you and I just get, buggered, for lack of a better term. and it's sad to see because it's what's wrong with the economy right now. Little business is what holds this thing all together, right? Capitalism in its small form is what makes these countries and these economies thrive, and we're getting the boots put to us since the 80s when they started dropping like the taxes on corporations and stuff with that insane trickle down economics, which had been disproven like decades earlier. But, it was fashionable because the rich just wanted to get richer. And, this sounds like I'm trying to be some sort of like radical protester and oh my God, he's just piping on about leftists. I'm not. I'm talking about the health of an economy, right?
It's really not a radical position.
Yeah, it's not. I am all for capitalism. But capitalism at its best is focused on small business. And big corporations should be either nationalized, I'm sorry to say it, because they're utilities at that point, or broken apart after they complete their task.
No,
I don't think any company should be led by people who are shielded by the corporate veil. You should be personally responsible for everything your company does. And if you can't cover all of the bases, then your company's too big.
True. Do you know, kind of going on to, it's same kind of area, but it's a different industry in itself. But companies like ExxonMobil, I think the initial company was, I'm blanking on his name. Oh my God, Rockefeller.
Yes, it was. Yep.
And Chevron and all the other companies were all in one. And the government was like, whoa.
Sure.
You're pretty big.
Much too big.
We need to say, and most of the American oil and gas companies are all descendants of that initial conglomerate.
Yep.
And I feel like the Amazons and stuff like that is just going through the same life cycle, where right now they'll be called growth stocks because it's fancy.
Yep.
But the politicians are like, okay, you guys have grown. You have a market cap of 1 trillion, 2 trillion, whatever it is today.
Yep.
See, the only difference, though, with the oil, though, is when they broke up all the oil companies, the Rockefellers still owned the majority shares of every one of those broken oil companies. So, really no change, right? Like that's
no change. That's why I'm like, if anything is to happen to the boogeyman, it's Amazon right now is the boogeyman.
That's one.
Absolutely.
I would love for them to be broken up. Grab some shares in AWS.
Yeah, absolutely. The money makers rather than the behemoth.
The behemoth itself.
Yep.
And like they've kind of been slowly transitioning into this whole new, he's going to space, or he has gone to space.
Yep.
Whenever he's going to. So you can kind of tell day to day he might not be as involved, but the management team that's there is kind of transitioning at Amazon into this new phase. Also factoring in that, we have all these allegations of anti-monopoly, going on.
Yeah,
and we're not
anti-labor and stuff. Yes.
His not the Jeff Bezos, not the CEO anymore. He stepped down, I believe, like last week. Technically last week, they have a new CEO now.
He's in the background, but I mean, he still felt right. And I honestly think
Vladimir Putin and
it's exactly totally. He's still running things just from another room. I think also it was a PR thing.
Right.
Bezos,
he had too much an open electoral democracy.
Yeah, exactly. No, he Bezos himself had collected so much bad press over the years that I think it was in everybody's best interests for Amazon to move forward that he back away. And I think he was also a little worried that he personally would start to get skewered for everything he'd been doing. Right. I don't, in some senses, not applauded. He managed to create a big business. But it wasn't anything new. As I harp on every time, he basically recreated Sears and Roebuck on a computer. Right. And it's nothing new. Right. And the only way he was able to make it work, whereas Sears and Roebuck actually did make it work, the only reason he was able to make it work was by monopolizing on the people that were selling things on the platform, as well as all of a sudden gathering all of the services that surrounded what he was doing, and then also becoming a seller on the platform. Right. All of it conflicted, and all of it was a different business. It's just, and it doesn't make any money. It only survives by the fact that it's a monopoly and crushes anybody else that's in its path.
True. As
Right?
I think it was Elon Musk who said, "Capitalism is creative destruction."
Well, that's a good transition, man. Because
Obviously,
Yeah,
he's
here we
not
go.
that's a
Speaking
good
of
transition.
which,
one of the topics today, by the
yeah.
way.
the jackass extraordinaire has entered the courts to fight off this idea that he had done some shady dealing in terms of the Solarcity acquisition for Tesla. It just reeks of bad business, and it reeks of insider involvement and a conflict of interest from word go. Anything he says is just ridiculous in terms of trying to fight this thing off. In the court battle itself, he was up to fine form, repeating himself over and over again in the sense that he just goes on the attack rather than actually tries to discuss what's going on. The fact is, he made him a slip within his own testimony that really does prove the shorters. Okay, a little bit of history. The company itself, SolarCity, had been shorted by some pretty major funds and stuff, and because it was a shitty company and it was going down. And, we can discuss the pros and cons of the short sellers because, some of them try to interfere to create their profit, and that's where it starts to become a bit dicey. But to just sort of make sure that the market is clean of shenanigans, they serve a function, right? So they were doing that with SolarCity, which was a complete failure as a business. So Musk, having a 20 some odd percent, I think it was 28% holding in SolarCity, as well as having a huge portion of Tesla, forced the acquisition through. And badgered his board to actually make it happen. And of course, you've got, do I call them Teslarati to try and, describe them? His following is rabidly loyal. And has no decision-making processes of their own. And basically, Musk just has to tweet, and they will follow blindly. So he sold it off to them, but all in his own self-interest. Now, as he was being questioned in court, we may have just lost our viewer, as being questioned in court,
Sorry,
Musk,
Steve.
exactly, Musk actually says, by his own admission, I really rather not be CEO of Tesla. Well, hey, jackass, why don't you move out of the way like Woz did, who actually went on to create better things for people in his community and his life. But, as the final to that statement, he said, well, if I left, the company would collapse. So whether or not the company itself had this idea that he was in control and had absolute control over it, Musk himself felt that. So there can be no way really for him to deny that he purposely skewed that acquisition to happen. He's gone on to say that it in and of itself has provided profit for the company. It hasn't. And only by rolling it into another one of the businesses that should be separate from Tesla, Tesla Energy, has he actually even made not a profit-making venture, but a revenue-generating venture? He's trying to pass that off as some sort of justification for buying SolarCity. It wasn't. It was covering him and Kimball's ass. That's all it was. It's just further evidence that he has no regard for the company, its shareholders, or anybody else for that matter. He doesn't care if the Cybertruck flops because he just loves it. Well, you know what? That's a major boffo on your part as a leader of a company, and you should care if it flops. Also, his shading of Bitcoin is heinous. His company has billions of dollars invested in this asset, and he's kicking it on the market. So what? Yeah, I mean, I'm not saying that he should be being some sort of rah-rah cheerleader because that's even worse. But shouldn't they be dumping this investment? No, he doesn't care. And then he also started going on about Dogecoin as some sort of, option to Bitcoin, spouting all sorts of useless technical jargon that I don't even think he understands. And the problem is that he has probably 28% of that asset in his wallet. So he's completely conflicted in everything he does. Every
I-
venture he has is a shielded investment on a bunch of different ventures. SpaceX and Starlink. Starlink will not get. We should have learned from Iridium. These ventures aren't workable unless they're a nationalized utility. They're not private ventures. They're something for the betterment of the population. He can't make money with Starlink unless he has 3% of the world's population. That's 300 million subscribers. And the subscribers that he will get from doing this venture are people that cannot afford this service. Ah! All right.
I just want to add this too. Barron's asked Elon Musk, since he's the CEO, they asked him, "Hey, why do you name yourself the Techno King?" And Elon Musk replied, "It generated a whole bunch of free press, and Tesla doesn't advertise, and it's helpful to general sales. Plus, I think I'm funny."
That's a marketing thing, which is fine. Great to have a marketing department. But the problem is that he's so cavalier about everything that I don't trust him anymore. He just says shit to say stuff.
Even more.
Yeah, well, okay, you know what?
Him?
I didn't trust him from word go. As soon as they started overvaluing Tesla and he started to think he was God in tech, it was unbelievable. The fact is most of these guys struck it rich once, and that's due to luck and timing, which is luck. But, they don't think so. They just think they've been imbued with this intelligence and enlightened role to guide humanity. And Tusk is one of the worst offenders. Tusk. I called him that again. Musk. There we go.
What about this? What about this here? We're gonna mention Kathy Woods as well, but there's someone in ARK Invest. They're talking about Starlink, and they believe that Starlink's cash flow would be negative for the first 8 years due to the high cost of launching satellites into space. But Elon Musk SpaceX manages these expenses to some degree by launching batches of Starlinks in reused rockets. Costs remain substantial, but they're on their way to generate 20 billion cash flow per year. And again, this is from ARK. Likely they're probably
against the $100 billion of investment they make. They still won't be making money.
That $20 billion a year in cash, Amazon today makes $20 billion in cash.
Wow. Well, there's a comparison, man. And it says here on a constellation that costs roughly $10 billion to launch, as replacement satellites would launch at much higher utilization rates. But I mean, it looks like ARK, if this ever goes, maybe they are actually already privately funding this.
Oh, they are absolutely. They're in over their heads on this. And the thing is that ARK has never been honest in any of its market valuations. Never. Kathy Wood, just recently said, "Oh yeah, Bitcoin is going to go to $500,000." Oh really? Are you a lunatic? It's unbelievable what she's saying, and now the institutional money is starting to see that she is a lunatic. I'm sorry to say it. I every kudo to her for the things that she's accomplished and getting this fund together. But if she thinks it was anything more than capitalizing on a trend that she had no control over, then she's crazy.
True.
Basically, right?
That's why
she's so overloaded and over leveraged on these stocks that are completely overvalued that the fund itself is in great jeopardy. And JP Morgan has made that statement now, saying that we bought puts, you should be buying puts. So
dot-com era bull trap in ARK fund. That's what they're calling it.
Yeah.
True. Before we go on, I want to read something from Jim Chanos in 2003, after the Enron like the Enron thing with faulty accounting and stuff like that. And it's his prepared statement. I should have sent it to you guys so you can see it on the screen, but he was basically saying, so who short sells? And he's like, okay, in the market, there are market makers who short sell. Then this is the good part. The second category of short sellers are those who are engaging in market neutral arbitrage and are seeking to take advantage of temporary or minute price discrepancies in markets or in similar securities. The third batch, while the above activities are common market techniques, they are also, are you back up? They are not what the public generally has in mind. anyone discusses short selling. The last category of short sellers is the investor expressing his or her view that a specific stock or market index is overvalued and will decrease in price over time. It is this activity that is often associated with hedge funds and is also a frequent target of corporate criticism. So it's like they're those people who are just making YOLO bets on short interest or ETC, that kind of stuff, and trying to squeeze out as much value. And then there are these guys, of course, conflict of interest, he's one of the guys, but there are funds like his and banks who are trying to dig through corporate fraud. And he's talking about Enron in this situation where he's saying, we looked through not even anything fancy, no insider info, just looked through the government documents, and something was not adding up. They were not making as much cash as they say they're making. There's this weird accounting. There are these weird acquisitions and different entities that are not even consolidated and stuff like that. And he says the same thing about Tesla. And he's had his short since 2015, 16, and he's held it since then and up. He said he's even added to it as well. And this was last year. And he's just saying there's just something that's not making sense in, I point at Tesla, but he says corporate America right now. He's calling this the golden age of accounting fraud.
Oh, absolutely.
And then his job most of the time is just going through and trying to see if there's anything material in a lot of what the companies are doing. He's named a few. IBM, he said it's a value trap, it's a dying company and stuff like that. But his main focus is on some of these tech companies that are not generating as much cash as they're telling their shareholders they are. And he's like, that's where short sellers like himself and other funds come in, and they adjust the market appropriately or gain from the downside potential. And I think JP Morgan is just sharing the same sentiment. It's like less off it's not one company. It's one company that owns a bunch of these other companies that are not generating any money. Most of them are opportunistic, which I guess is what she's trying to get at. But it's like the risk payoff for investors is not properly being disclosed to them. It's like she's not really being an investment company is a trust. You're putting your trust in that investment manager to allocate your capital, with the highest amount of integrity and loyalty. But she's just doing it, and now she went from 3 billion in assets to 50 billion in assets, and has the same rhetoric, no change in system, just continuing the same procedures and no new information, except maybe adding a Bitcoin ETF and stuff like that is what she's trying to do now. So I completely get what the banks are doing. They're like, it just makes no sense. You're too bullish. Nobody is this bullish. And whenever anyone is this bullish on such untested markets, there has to be something that's going on underlying some of the companies that she owns. So yeah, the golden age of corporate fraud is what he's calling 2016 to 2021.
I'm just showing this. This was published earlier on in the year, so obviously things might have changed. But his top 5 short picks are Tesla, iRobot Corporation, who make that Roomba vacuum cleaner. We have Beyond Meat, and I know that one's always
makes sense.
That makes sense. Beyond
I agree
Meat.
with that.
GSX TechEdu, which is apparently some sort of China-based tutoring company that offers kindergarten to grade 12 courses through its state-of-the-art technologies. I haven't actually looked at that, so we can just see what that's trading at right now. GSX doesn't even look like it's traded in America anymore.
Oh, see, there you go.
Maybe it never was. I don't know. And also, believe it or not, the SPY, the S&P 500, the SPY.
Well, because they took FANG, and that was the problem, right? They've got like Netflix and all those other guys and Amazon, which are bound to fucking drop, don't you think?
Oh yeah, a lot.
Oh yeah, especially with the growth of competition in the streaming service. I mean, Netflix is definitely going to take a dive.
What Netflix just did, I think recently, I don't know how it's going to work, but they're offering video games now starting
Yes.
next year. I'm
Yeah.
not sure how that's going to work though. So
It's just,
Wow.
again, it's cluttering the service, right? You need to really focus on one aspect and make it the best it's ever been and sell that, right?
True.
If you want to make a video
Agreed.
game company, create a video game company and do the video games.
True.
Right.
Diversification here isn't going to work. What they want to do, like you said, is they
Joseph?
want to auger down, and they want to make themselves the best possible company in one area rather than try to spread out their energies and their money in multiple different directions. I mean, they're gonna end up losing on all of the fronts instead of being a moderate success in one.
Exactly.
Be mediocre in many and not an expert in one. That's kind of why I'm like, right now it's kind of such a weird time where a lot of the big institutions, if a lot of their rhetoric right now is, yeah, we're just waiting and piling up cash. The common numbers is being thrown around 25% in cash, 50% in cash. It's like, yeah, it's like, but the weird thing about the market, which I don't think is ever kind of talked about as much, is most people are aware there's an overvaluation problem. Most people are aware that, Tesla's not making, like, it's not private. The numbers are there.
Yep.
You can check that Tesla's not making money, etc. But it speaks to how much delusion and greed can play a factor in investment choices. And not only for amateurs, it's also professional, money managers. And I always think to myself, if I lose $1 in my account, I freak out. I can only imagine losing somebody else's dollar in another account, and you have to report to them every quarter. It's like, I don't know how they sleep at night. I don't know how Kathy Woods is sleeping at night, knowing the stocks that she owns.
No, I think it's typical of what you were saying, that it's the corporate culture that has probably been in place since the 80s, really. It became a little bit freewheeling, and the .com sort of era really kind of pushed it to the forefront, where these guys could sell a dream and didn't have to have anything. And then all of a sudden, everybody started jumping on this dream for FOMO's sake, right? Creating these valuations that were just absolutely insane, and that became the norm. I think also one of the biggest problems is not just retail investors, as you said, but everybody playing the market like it's a fucking casino.
Yeah. Again,
day trading is the worst thing ever.
A whole nother show on them, but I really want to go into Robinhood. I have so much.
Next week, man. We'll do it next week. We'll look into.
Sounds good to me.
What they do.
So
I think
probably talk about China's new central bank currency.
Yes.
This week.
CBDC. Yep.
True. I just hate that you masquerade as a welfare system to help people, achieve success, and you hide fees behind weird pricing on stocks and stuff. It's just crooked. I think it's crooked.
Very much so. Well, I've totally not checked the clock. We've run over time. Joseph didn't get to talk about the Chinese central bank new currency. I'm really sorry, Joseph. We're going to tackle that next week, I promise. Because that's a huge shift in the cryptocurrency market, and it's kind of silly that we didn't discuss it. I'm really sorry. That was mostly me just ranting on and cutting everybody off. Oh, there's Musk himself.
It gives me a chance to read the white paper.
Okay, well, that's good. All right. Feel better now. Well, thanks, everybody, for hanging out and listening to us, me rattle on. These other guys dispense good information. I just get angry and shout. But it's good that you're around, and I'm glad that you stuck around. We'll be back next week, I promise. TK, Joseph, myself, Vishal, and Maddie will be back as well. So we'll tackle Robinhood and China's central bank cryptocurrency. All right, guys. Thanks very much. I've got to prepare to get out here. There we are there. There we are there.
Thanks, Steve. See you next week.
Yeah, have a wonderful week, people. Take care.
I wanted to end off with...
there we go. Thumbs up from Elon Musk. I got to punch that guy in the face. All right, bye.